Hey everybody, welcome to Money's No Object. I'm your host Dylan Howell. This is episode number 48 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys about personal finance topics that I really think can be useful to you in your long-term wealth building journey. Today, we're going to talk about something that too many people see as a measure of financial success, and they look at it the wrong way. And it's commonly misconstrued as this way of seeing how good somebody has it or how good somebody is with their money. And that is the credit score or the FICO score. And we're really going to dig into what it is, how it's calculated, all these types of things. But really and truly, we're going to talk about why it doesn't matter that much to your financial success. But hey, before we get started, if you could, go down below, hit the big red subscribe button. Also, like this video. Leave me any feedback in the comments of questions you have or anything, and I'll be sure to get back to you there. If you're listening to this episode on Apple or Spotify podcasts, make sure you subscribe to this show there and leave me any review that you can leave. I know you can on Apple, so make sure that you do that for me. Also, if you want to follow me on social media, at MNO with Dylan is my handle on the social media accounts. And I think that'll really help you. I put out a lot of good stuff that can just really help you push forward and motivate you every day on differing topics. Also, if you need a financial coach or somebody to help you put together a financial plan, I am your guy. You can sign up for a financial coaching session at my website, www.mnowithdylan.com. So what is this credit score? Well, the credit score is a number between 300 and 850 that depicts a consumer's creditworthiness. So it depicts how worthy you are of lenders lending money to you. The higher the score, the better somebody looks to a lender, and the lower, the worse somebody looks to a lender. Your credit score is based on your credit history, the number of open accounts you have, the total levels of your debt, your repayment history, and other factors. Lenders use these scores, and what they do is they evaluate the probability that you won't repay your debt. And if that probability is too high, then you're not getting money from them, or your interest rates are going to be crazy, and the terms of the debt are going to be crazy. So this is an indicator to lenders as to basically whether or not they should lend you money and the terms to which that money should be lent. And many financial institutions use the FICO, F-I-C-O, scoring system. And this was a model created by the Fair Isaac Corporation, FICO, right? F-I-C-O. And while other credit scoring systems do exist, the FICO score is by far the most commonly used. And there are a number of ways to improve an individual score, and that's like repaying loans on time, keeping debt balances low, whatever. And the score ranges for the FICO score, they go poor, fair, good, very good, and excellent. So the poor is 300 to 579. The fair is 580 to 669. Good is 670 to 739. Very good, 740 to 799. And then excellent, above 800. Then there's one more, having no credit score or an indeterminable credit score. And what this does is this means you have no debt and you don't owe anybody anything. And it's been a long enough time that they can't determine what your credit worthiness is. And so you have an indeterminable score. But that's not necessarily a bad thing. So what are the determinants of your credit score? Well, there are three major credit reporting agencies in the U.S., Experian, Equifax, and TransUnion. And they report, update, and store consumers' credit histories. And so that's why a lot of these different companies always are offering your credit score for free, or check out your credit history, or all these types of things, because they're the ones who compile it all together. Now, while there can be differences in information collected by the three, there are five main factors that impact your score in all three different situations. And those are your payment history, the total amount that you owe, the length of your credit history, the types of credit, and the amount of new credit that you have outstanding. And some will look at credit inquiries and all these different types of things, and they play into your FICO score. So your payment history, that accounts for 35% of your score, and that basically just says, in the past, has this individual paid off their debts on time? Then the total amount owed is 30% of the calculation, and it is also known as credit utilization, because they want to know how much do you currently owe based on the amount of credit that you have available to you. Then the length of your credit history, that is 15% of the calculation, and that just has to do with how long you've been paying on debts, how long you've been making your payments on time, all those types of things. And longer credit histories are seen to be less risky. Then types of credit accounts play into 10% of the calculation, because this has to do with, does an individual just have revolving credit like credit cards? Do they have these other types of loans like car loans, mortgages, whatever? And they want to know if you have a mix of different types of payments that you've made or just one type. Then new credit accounts for 10%, and that has to do with the credit inquiries I was talking about earlier. How many recent credit inquiries have you had? So really to know, how often are you going out and applying for new credit, because maybe that's going to deter a lender from wanting to lend to you, and so that plays into your FICO score as well. Now this is basically telling a lender a few things. It's basically telling a lender how willing we are to take on and keep debt. So it wants to know, how willing you are to have debt and how willing you are to keep it, because it talks about long credit histories. Well, that's going to require that you keep debt for a long period of time. Also, it's going to say how reliable are you at paying your debts off. Even though it wants you to keep debts, it also wants you to be paying debts off. So it wants you in this cycle of paying them off and getting new ones, paying them off and getting new ones, right? Okay. And then what types of debt do you typically take advantage of? It wants to make sure that you're taking advantage of different types of debt, right? Basically, what this is telling lenders is, what relationship do you have with debt? Are you friendly with it? Are you sour with it? Have you used it and then abused it? Or have you never used it? Or that, all these things are basically indicators of that relationship. Do you have a good relationship with debt or not? And my view on these things is that I don't want to have a good relationship with debt. I would love to have no relationship with debt. But there are certain things that this particular FICO score and thing, it can help you, but it does not matter. The FICO score doesn't matter. And I'm going to explain to you why. First of all, it relies on you having debt. Okay? It relies on you having debt. What's part of my financial action plan? Get out of debt. And so why would this thing need to stick around? Why is this thing a measure of financial success? Doesn't seem very successful to me if you're sitting around with debt. Now, if you are applying for a car loan, yeah, FICO score is going to matter, but I don't want you applying for car loans. If you're applying for credit cards, then FICO score is going to matter. Well, I don't want you applying for new credit cards. But I don't want you in debt. I eventually want you out of all debt, your home and everything eventually, and then never have to worry about a FICO score again. So another reason the FICO score doesn't matter is that it tells me nothing about your assets. It tells me nothing about your cash, your investments, your save. It tells me nothing about that. It only tells me about your relationship with debt. Now, obviously, you need money to service your debt, but it tells me nothing about the other monies that you have. And that's a true measure of financial success. Truly, you can have a perfect FICO score and a negative net worth. Now, what do I mean? What you owe can be more than what you own, but you can still have a perfect FICO score. It's not taking into account whether you own a bunch of things or not. It's just taking into account whether you can make the banks happy or make your lenders happy over time. So let that sink in. You can have a negative net worth. You can owe more than you own and yet be seen as more creditworthy than somebody who owns a bunch of stuff but doesn't borrow money very often or at all. So this is obviously not a measure of financial success. This is obviously not something you should look at and go, this person's got their money in order. FICO scores don't mean anything. You can have no FICO and be a millionaire, multimillionaire. You can, and there are plenty of them out there who have no FICO score, but they're multimillionaires. And you see how that correlates, that being out of debt and not taking on debt can correlate to actually having money and actually having assets that you can live on in the long term and be a millionaire. If you just continue borrowing, then you're going to have to continue paying. And that's going to be a drain on your cash over time. And why else does a FICO not matter? Because you can buy whatever you want without one. You don't have to have one to buy anything. Obviously, this means you must pay cash for things, but isn't that what we want anyway? Like, you don't have to have one to buy anything. So let's say you have no FICO. You never want a FICO, you don't have a FICO. You want to buy a car. Guess what? I can go save up and buy a car. Done, right? Let's say I want to buy a house. Well, harder to save up for. You could, but I can still get a mortgage on a house. I can go through what's called manual underwriting. It's not the easiest of things to go through. It's not the easiest of things to find that mortgage companies do it. But you could, right? You could do that and still get a good rate and, show them everything about your financial life and be perfectly set up in order to succeed financially and not have a FICO. You can rent without a FICO. Now, people say, how do you do that? Every time I went to rent somewhere, they asked, to pull my credit history. They will. And if they look and they find that you have no credit history, well, guess what? Then they can still work with you. You just have to be upfront with them and say, I don't do debt. I don't take out debt. So what I want to show you is that you can show them your income and your, your expenses and making sure that you have the money to pay for the apartment. They may make you pay a little bigger deposit, or they may make you, put down first and last month's rent. But what it's going to do as well is it's going to show them that you can actually pay and you will get an apartment. More than not will actually do this. I've seen individuals do this on videos before where they'll call up apartment complexes and just ask, hey, do I need a FICO score? And they're like, no, if you just show us, your income and your ability to pay all this kind of stuff, you have to pay a little bigger deposit, whatever, but you can still rent here. That's all that you want, right? So is it worth going into debt to maintain this thing that doesn't even really matter? So if you do live without a FICO score, like I was saying, with the home mortgage, you can definitely get a mortgage, but your down payment's going to be a big part of that. You definitely need to have a big, juicy down payment that can really show that, hey, I'm a saver. I got money. I got it sitting around. I can just go ahead and put that down payment down. You need to have your, reasonable, good income, low expenses, all those types of things. When it comes to renting an apartment, very similarly, you need to show that you have savings, that you have money, and that you can pay for the things that you need to pay for. And there's this other weird thing where when people apply for certain jobs, they get their credits checked. And so this specifically happens in the financial industry sometimes, like investment banking and things like that. They'll check your credit history, and if you don't have a high enough credit score, then you can't work there. Well, again, the key here is to actually communicate that you don't do debt and you don't deal with debt. And so you don't have a credit score and you don't have a FICO score. And if that's not, respectable to them, then apply for a different job. It's not that difficult, and there aren't enough employers that try to check that out that it really even matters in the long term. The FICO score does not matter. And bear in mind, everything that I'm talking about here, getting a mortgage, being able to rent, being able to get a job, being able to do all these things, right? Everything I'm talking about here is with no FICO score, not with a low FICO score. Because what's a low FICO score tell a potential lender or creditor that you're not good at paying your debts back, right? Or that you haven't paid your debts back, or you haven't had debt very often and you're not good at it, right? And that's not the message that needs to be portrayed. What needs to be portrayed is one of two messages. Either I'm really good with debt, which we don't want to be good with debt, we just don't want to have debt, right? Or I don't have debt at all and I don't mess with debt. And they'll respect those things, but they will not respect not being good with debt and showing that you are not good with it. That's going to be a place where you're going to lose a lot of those advantages that no credit score has. So that tells you that when you have that really low one, your goal should not be try to push towards the high one and try to keep, paying on debts to get to the high one. No. If you have a low credit score already, a low credit score already, you just need to get out of debt and get to the point where you have an indeterminable credit score and that you can pay for things in cash. Now, it really comes down to this. What do I suggest and what do I actually do? Because I want you guys to actually be able to look at what I do and emulate it, right? I want you to look at what I do and make that same thing work for your life. I want you to be able to see that I practice what I preach and that I'm not telling you to do one thing and then myself doing another thing. So what do I suggest? Well, I suggest, first of all, you pay off all consumer debts. All consumer debts. I don't want any debt balances outstanding other than a mortgage if you have a mortgage. Okay? So we're going to pay off all those consumer debts. Then what are we going to do? We're going to keep a credit card or two with good benefits around. Talked about credit cards before, right? I do keep a credit card. I keep 2 credit cards, right? One that has good cash back and then one that I get airline miles with, right? And I never hold a balance. I pay them off every single month. Never fails. Always pay them off, right? And I make sure that I'm not overspending. Okay, now let's kind of dig into this one by one. So what I'm doing is I'm keeping these credit cards around. I'm not accruing interest. I'm not holding debt balances. I'm simply using them to get those rewards and maintain my FICO score. Because it is easier to get a mortgage with a FICO score. And it does take some work out of renting if you have a FICO score. And you don't have to worry about that thing with a job if you have a good FICO score. Okay? I will concede that to anybody who wants to make the arguments and anybody who wants to leave me anything nasty in the comments. But that is not the most important thing. Okay? I do it because I'm playing the game. It's a game, right? All these things have been set up this way because there's a game. They want to keep you in debt. The lenders want you to come back for more and more debt, but we don't want that. We want to win at the game. Now, is it difficult to win at the game? Absolutely, it's difficult to win at the game because you're not set up to win. The lender is set up to win at the game where they keep lending you money. And the credit card company is set up to win in the situation where they keep giving you credit. If you notice, and this is a really interesting thing, if you're really good with your credit cards and you're paying them off all the time, you ever notice what credit card companies will do? They'll offer you higher limits. Now, what's that doing? That's just tempting you to push higher, to build up a balance, and eventually not be able to pay that credit card off the way that you have. And that's their way of making sure that they win. But you can make sure that you win if you are self-disciplined, if you have the safeguards in place that you can be honest with yourself and have some honest conversations. Now, this is what I think about holding the credit cards, keeping the credit cards, right? If I know that I have the type of personality that will not allow me to keep a credit card around and be responsible with it, I've talked about this before. I do not do it, okay? I'm not keeping debt around for fun, okay? I'm not keeping any type of debt instrument around for fun. The only reason I'm keeping a credit card, benefits, FICO score. That's it, okay? I would rather you have 0 indeterminable FICO score, right, than fall into the trap of having credit card debt at 24% interest and playing, patty cake with Visa or MasterCard or whomever. I want you to get out of consumer debt. And having the credit cards doesn't mean you're back in debt. It just means that you are using them basically as an extension of your checking account. And that's the way I think about it. I think of credit cards as an extension of my checking account. We can never think that the benefits of debt are better than the disadvantages of holding it and building up a balance. The disadvantages are far, far worse. I've talked about this before, but it's so important that you understand that these benefits that you're offered are not worth the pain of falling back into debt if you know that you can't win the game. Because if you ever wondered why, when you look around, stores offer you credit cards and Amazon offers you credit cards and all these different places offer you credit cards, right? Why do you think they do that? Because they can make money on those credit cards because you're not going to pay them back. Most people don't pay them back month to month, right? I've said that before. Most people don't do that. That's a myth. But if you know that you're self-disciplined enough to do so, and I know myself, I'm staunch on my finances. There's a reason that I'm telling you guys about my personal finances because I'm very staunch. I'm very straightforward. I follow the rules that I set for myself when it comes to my finances, and it works. But some people aren't able to do that. That's fine. I'm not saying that that's an issue. I'm just saying don't think that your credit score is so dang important that you have to put your financial life of yourself and your family in danger in order to just maintain this thing that is not a measure of financial success. I'd rather you be building savings. I'd rather you be buying things in cash. I'd rather you be doing things like that in order to get to a place where you want to get that is successful. Success financially is not from the FICO score. Success financially is from your ability to get out of debt, build savings, invest for the future, pay off your home, all those things. And it culminates, right? It culminates to where all those things work together to a point of financial freedom, to a point of financial success that you will experience in the future if you're following something like my financial action plan. And I don't think that that's the only way to go about doing something. I just think it's a very good, very thoughtful way to walk through and have a plan that will work for just about anybody. So if you don't need to keep a credit card around, which many of you don't, then get used to a life with no credit score. Pay everything off, get to no credit score, get to indeterminable credit score. Because otherwise you're going to feel the pain of being in debt. You're going to fall back into being in debt. It's not worth it, okay? I do want you to do what I do, but everybody's not the same, and everybody's emotions when it comes to money are not the same, and everybody's habits when it comes to money are not the same. And so I don't want you to think that just because I can do it, you can do it too. And I don't want to set an example that is dangerous to you guys. I want you guys to do what works for you and be honest with yourself. There is no shame in whichever way you're able to handle your finances in this particular way. But get used to living with no FICO score if you can't control yourself, if you don't have the self-discipline to keep those couple credit cards around. And then that means you'll be paying cash for everything, which is fantastic. Pay cash for everything. And then guess what? You actually own it. You don't have to make a payment to a company. You actually own that thing. And that is glorious. That's a great feeling. And it's something that nobody can ever take away from you when you're actually paying cash for things. And is it a little more difficult to get a mortgage? Yeah, probably. Can you do it? For sure. Is it a little more difficult to rent? Do you have to do a little more work? Yeah, probably. But can you do it? For sure. All these things, it's not hurdles that you cannot jump over. It's just hurdles. And I would rather have those hurdles than the hurdles of being deeply in debt. I would rather have those hurdles than the threat of bankruptcy. I would rather have those hurdles than 24% interest rates. Trust me. The benefits of being out of debt and the benefits of no FICO score are far better than having a good one and being deeply in debt. Just doesn't make any sense. So what are my final thoughts here? The allure of the high FICO score in America has pulled people away for far too long. This is not a measure of prosperity. It is not a measure of financial success. It is not a measure that you do the correct things with your finances. It is 100% a way that it has been tied into all of our lives, that banks and other lenders can evaluate us time and time again and see if we're good enough to lend money to. But I don't want to borrow money for the rest of my life. I don't want to be looking around going, I wonder if I can get this car loan or get this new credit card or get this. I don't need those things. You don't need those things. What we need is to be able to work on our personal financial life to the point where we can pay for things in cash, that we can, not have to deal with debt, not have to make debt payments. That's why the financial action plan is set up the way that it is. So I implore you, follow the financial action plan. It will walk you through the steps as to how you need to get to financial freedom, to financial success. And it's okay if there are some minor hurdles along the way that are consequences of not having a FICO score. But you know what you always know? You always know that you were out of debt, that you owed nobody money. And guess what you have when you don't have debt? You have money. So hey guys, don't forget, go down below, like this video, subscribe to this channel, the big red subscribe button. Leave me any feedback in the comments that you have for me. Also, if you're listening on Apple or Spotify podcasts, make sure that you go in and that you subscribe to this show on that particular platform and leave me a review there. Also, follow me on social media. I'm telling you, that's a good follow. That's something that day by day I'll be hitting you with different topics that maybe you don't think about or maybe isn't on your radar. But I'm constantly thinking about these different things that I think can be edifying to you and that can really help you move forward in your personal financial life. And I'm always posting them on there. And then also, if you want to work one-on-one, if you want somebody to help you build a personal financial plan for yourself, then I can help you do that. You just have to go to my website to sign up, www.mnowithdylan.com, and you can go to the Work with Dylan tab and pick the type of session that you would like and pay for it there. So that is the service that I offer to you, the big service that I offer, and I think I can be of a lot of assistance to you guys, especially if you're agreeing with what I'm saying and you'd like to just jump on board with me. So check out tomorrow's video as I talk about emergency funds and how there are so many ways that it can rain on your financial life, and emergency funds are necessary to help cover all of them. So thanks for tuning in to this episode of Money's No Object. I am your host, Dylan Howell. God bless.